$75,000 per year. That's the number you've probably heard over and over again as the supposed magic figure where money stops buying happiness. This idea comes from a 2010 study done by two researchers, Daniel Kahneman and Angus Deaton. Since then, media outlets and influencers have repeated the idea so many times that it's taken as fact. It fits nicely into other popular beliefs like money can't buy happiness or mo money, mo problems. But here's the problem. It's not really true. The first clue that people misunderstood this study is in the title itself. High income improves evaluation of life, but not emotional well-being. In simpler words, more income helps people feel better about their lives overall, but it doesn't necessarily make them happier on a daily basis. It means your long-term outlook improves, even if your day-to-day emotions stay the same. This can be explained by something psychologists call the hedonic treadmill. The hedonic treadmill is the idea that people quickly return to their usual level of happiness after major life changes, whether those changes are good or bad. Imagine winning the lottery. At first, you're overjoyed, but after a while, that excitement fades and life feels normal again. That doesn't mean you're ungrateful. It's just how human brains work. The same thing happens in reverse. If you lose your job, you'll feel terrible at first. But after some time and support from family or a new opportunity, you'll probably bounce back to your normal happiness level. But this study wasn't just about psychology. It was based on real data from 709,000 households in the United States. These households were asked about their income and also about their emotional states. Questions included things like, how often do you feel stressed? Do you smile daily? And what do you think your life will be like in 5 years? Their answers were turned into scores using a system called the Cantril ladder, which ranks well-being from depression to prosperity. What stood out was that Americans did quite well on daily emotions, like smiling and laughing, but they scored poorly when it came to long-term stress, ranking 5th highest in the world. Still, the average score across all those households was 6.76 out of 10, which placed the U.S. ninth globally, just behind countries like Canada, Switzerland, New Zealand, and the Scandinavian nations. So what did the study really show? It actually found that higher income did increase long-term life satisfaction. It just didn't do much for short-term emotions like joy or stress. This is where the hedonic treadmill comes in again. Our daily feelings tend to stay stable, even if our income goes up. But in the bigger picture, people with more money generally feel better about where their life is heading. $75,000 per year is often seen as the point where money stops being a daily struggle. But that doesn't mean it's enough to reach bigger goals like buying a home, paying off debt, or taking vacations. That's a huge simplification. Even then, people forget about two big problems with that number: the variables and the timing. Every scientific study has variables. The dependent variable in this case was happiness, both short-term and long-term. The independent variable was income. But for a strong link to be proven, other factors need to be controlled. And this study assumed that every household was the same, which is clearly not true. For example, if you're a single young adult with no loans, living in an affordable city, $75,000 per year could feel like luxury. But if you're supporting a family of 5, paying for a mortgage and student debt in Los Angeles, the same amount would feel like barely enough. Context matters a lot. Then there's the issue of timing. The data used in the study was collected during 2008 and 2009, right in the middle of the global financial crisis. That was a time when millions of people were losing jobs, homes, and savings. This added financial stress could have lowered everyone's happiness scores, regardless of income. In more stable times, many people might have reported higher satisfaction levels. Another thing people ignore is inflation. That $75,000 figure from over a decade ago would be more like $90,000 today. So if someone says money stops making you happier at $75,000, they're quoting outdated data in a completely different economic climate. Cost of living has gone up, and so has the income needed to avoid financial stress. There's also a surprising twist in more recent research. A newer study found that people earning more than $75,000 actually showed a drop in happiness. Why? Because many thought that hitting this number meant they'd finally be happy, only to realize it wasn't the emotional breakthrough they expected. That disappointment alone made them feel worse. So what's the real answer to the question, How much money do you need to be happy? The honest answer is more. That might sound vague, but it's accurate. Studies consistently show that happiness increases with income. At the same time, negative emotions tend to decrease. And there's no hard limit. There's no income level where happiness suddenly stops improving, but the relationship is logarithmic. This means the more you earn, the smaller the emotional gain from each additional dollar. Let's say someone goes from earning $25,000 to $50,000 a year. That kind of jump can cause a big boost in happiness. But if someone already earns $250,000 and they get an extra $25,000, it won't feel nearly as meaningful. To feel the same improvement, they'd need to double their income to $500,000. That's why happiness grows with percentage increases, not dollar amounts. People also reported feeling happiest when their income was steadily growing. Getting regular raises or promotions felt better than simply having a high salary that never changed. Growth gave them a sense of progress, while a stagnant income, even a large one, felt discouraging. A steady stream of small rewards helps keep people emotionally satisfied. Lastly, income is only one part of the picture. In the original study, income explained about 37% of people's happiness. That's a lot, but it also means 63% was tied to other things. Things like health, relationships, community, spiritual life, and having a work-life balance. In fact, too much income often led to less time, more stress, and poor balance. So someone with a modest income can still be happier than a wealthy person who is overworked, unhealthy, and lonely. That's why there's no single number for happiness. It's about more than money. It's about how you live your life. Thanks for watching InvestingFlix. If you found this video helpful, don't forget to like, share, and drop a comment below. For more expert insights on personal finance, investing, and wealth building, hit that subscribe button and turn on notifications so you never miss out.